welcome to Tradiers, the Trader's Edge. I may have just insulted Bobby right before we went live because he said there's a storm going on, so my internet might be cut off. Like that's the dream. I can just keep talking without you interrupting me. And I think he was a little insulted. I'd like to apologize, Bobby. Also, there's a discrepancy about the shirt. He claims it's navy blue.
This is navy blue.
Absolutely Dago black, just like the 100 other shirts, which I like.
No credit for having a very diverse wardrobe.
Very diverse. The charcoal gray, black, and navy blue so dark that it looks black. Yeah. Oh, it actually looks a little bluer there.
A little blue. I get no credit.
You win. Okay,
no credit at all.
Before we bring our guest on, I want to talk about equity markets that just the last couple of days. I feel it's important. We made new highs from last week. We did not have a good day today. We're down about 20 last I looked. What do you think still? Still bull? Still strong?
Yeah, still bullish. I mean, the only thing I could think, and I really can't wait. This is the first question I have for our guests. Feel free to steal it if you want. Is what happened today reflective of how seriously people are taking the deal is done post by President Trump this morning with China?
Well, I do want to talk about that.
They're not taking it seriously, and that's where the sell-off came from.
Right. Well, also copper down today. The renminbi, which, by the way, and no trade deal should have ever existed without them changing the name of their currency to something that I could pronounce a lot easier. That should have been.
Would you just use yuan, or is that like a completely separate currency?
No. Yuan and renminbi are the same thing. I think. Right. Either way.
You want to be able to say
it. Yuan, renminbi. But anyway, the renminbi was basically flat. Copper was down. That could have just been a buy the rumor, sell the fact thing because it's been up 20% in the year. But to me, when I look at markets, it's like the market yawned and said, yeah, this is going to resurface again. This deal is not really done. So let's get our guest in. You guys know him. We talk about him all the time. Jared Dillian, who's the author of one of my favorite finance books. I talk about it all the time, which is what's called again, No Worries, Money, No Worries.
Yeah, no worries.
Yeah, and this book, which, by the way, Night Moves. This is a series of short stories that are so well written. And the point
I'm about to make, book, man.
Yeah, it's a fun book, and we all have attention spans of the gnat now. So if you don't want to dive into a big novel, and by the way, that's social media. Everybody gets immediate things. So these short stories can be read, probably in about a half hour to 45 minutes each. They're engaging. They're fun. Please pick up the book. Let's bring in our buddy Jared Dillian. Jared Dillian, how are you, my friend?
Hey, what's up?
Good. I really do. I've bought your book for a bunch of different young people. I love your setup for the what do you call the portfolio? The awesome portfolio. In my head, I adjusted a little bit for age. If someone's 23 and just starting out, I increased the equity part of it, but it is a framework and a blueprint, and I really like it, and I appreciate it very much. Is it going well?
Yeah, it's going well. So there's going to be a follow-up book to No Worries that's going to come out next year. It's called The Awesome Portfolio. It's a whole book about the awesome portfolio.
That's fantastic.
And there's going to be, I can't really talk about it now, but there's going to be some other exciting stuff that's going to happen around that too. So yeah, that's written. I finished a draft of it. It's with my editor, and that should be coming out in September of 26. But I also have, while we're talking about this, I have another book coming out in 2 weeks, 13 days.
What is that?
Glasses on.
Rule 62, Meditations on Success and Spirituality.
Awesome.
And it's an essay collection. And it's, the title is descriptive. It's about success and spirituality. It's really about my journey from being a very emotionally unhealthy person 20 years ago to being a very healthy person today. So there's lots of good stuff in here. The book is a monster, actually. It's 350 pages, and you can pre-order the Kindle now, and this is being released on June 24th. So
that's outstanding. Okay. Rule 62 is the book, friends. Bobby, you can ask your question. I won't steal it from you, which is a little out of character for me.
Actually, I'm going to ask two questions because I decided as Jared was talking that there's a different question I want to ask first. I want him to talk about, he had some very recent DJ success. that a lot of people don't know about. I watch the Macro Dirt, so I get a lot of information about your personal life because Tony just can't ever leave you alone with that stuff. So I love Tony. By the way, Macro Dirt podcast, one of the most fun things you listen to. Only an hour. It's a great listen. Talk to us about your DJ success.
Yeah, so I managed to honey badger my way into a gig opening up the Palm Tree Beach Club pool party at the MGM Grand. And
That's
it used to
big.
be called, if you probably heard of Wet Republic, it used to be called Wet Republic. It got rebranded. Probably the biggest pool party in the world. I played from 11 a.m. to 1 p.m. It was on a Friday, which was a little bit low stakes. It was really more of an audition. They loved it, and they want me to come back. I was hoping to open for Tiesto on July 19th. I don't think that's going to happen, but maybe I might be opening for Zed on July 26th. So yeah,
Am I supposed to pretend? I'm supposed to pretend I know who those people are, right? That's what I do.
Those
here.
are those are very big names. Tiesto is the biggest DJ in the world, in my opinion.
Zed, man. Yeah. Zed, what he did at that one, yeah, man, is awesome. Yeah, but anyway.
Yeah. So here's the second question, Jared. Today's sell-off. We are live right now. So we're not, this is not like our other one where we're recorded and it's more evergreen stuff. Today's sell-off, not dramatic, obviously, down about 1/3% in the two indexes that matter, right? The S&P and the NASDAQ. A little bit more in the Russell, Dow Jones, right around the flat line. That's after a rally. As a matter of fact, the NASDAQ hit the highest level since, I think, February, since late February today, before it sold off. Is what I said, and I don't know if you heard what I said, but is what I said earlier, where I thought this is probably people shrugging off the announcement by the president that the trade deal was done. They're just like, okay, that's fine. But as Jimmy said in the open, it's going to rear its head again. What do you think?
I think the trade deal being done with China is priced in. I mean, like if people were expecting a pop on that, everybody is already long on the basis of the fact that that was going to happen, right? So when Trump announced that the deal was done, really nobody left to buy, and you got a little bit of a sell-off. Now, 1/3% is not even really statistically significant. Like, I don't really start paying attention till it's at least 1%. I heard you mention that you were still a little bit bullish.
Yeah.
I'm on the bearish side. I'm actually
Okay.
I'll take the opposite view, mostly on technicals. Yeah, I'm actually positioned reasonably short right now. So, and that's I put that on in the last couple days. So
when you are reasonably short right now, is it because you still feel there's tumult to come, or I guess you said it was mostly technical, but are you, like I at the beginning of the year said, I thought all 2025 was going to be a bit of a crapshoot because it's a huge transition year. Is that into your calculus as well, or you just think technically it looks stretched?
Technically it's stretched, it's overbought, and I'm not even looking for like a 5% pullback. I'm looking for like a 3% pullback.
Yeah. Oh, you're talking trader talk, not investor talk. I got you. Yeah.
Not a crisis by any means, you know.
So what you just said, by the way, about it being priced in, what I said, and I didn't tie it up as eloquently as you did, the fact that copper traded off after being up 20% of the year, the fact that the renminbi didn't really move at all, but it has strengthened quite a bit. It's been an interesting trade. It weakened a crap ton after the election, but then strengthened halfway back after the inauguration. And now it just kind of went sideways after the announcement today. If the market was caught off guard and celebratory, that would have strengthened quite a bit. So both those things kind of fit into that thesis, right?
Yeah. And also silver has been ripping for the last couple of weeks. It had a reasonably big down day today. Platinum opened 5% higher, but ended up about 2.5% higher. So I think the rally in the metals is getting a little tired here. You know, and gold is pretty much unch. So, I mean, it's been a big couple of weeks for the metals, but I think it's gonna go sideways for
nothing goes one way forever, Bobby.
Yeah.
Yo, you're off. He's up.
You're
This
muted.
is again. This is what I talked about before.
Yeah.
This is a dream. We can't hear it.
I'm good.
Oh,
There's
shit,
a
he's back.
lot of typical Florida thunder in the background that I wanted to thunder over Jared's polished and intelligent words. When I said I was bullish, so I don't own the indexes right now. I own a handful of individual stocks. Okay. One of them is Paychex, not doing so well. The other one is Palantir, doing very, very well. But I'm looking to cut that because I'm just uncomfortable with a long-term Palantir hold. I was also long, I hesitate to say this because I didn't put it in the newsletter. I was long Oracle, right? And Oracle just beat on basically everything. Earnings, adjusted earnings, better. Revenue, better. EPS, better. And as I look at the stock in the post market, it's up approximately, let's see if I can kind of track it down here, about 5.78% right now. This is how I'm long. I'm not positioned short anywhere in the equities. When you talk about being short, you talk about being short essentially the entire market, NASDAQ or QQQs or however you do it, or are you just have options positions? How specifically are you short? Because again, it is an active investment, which I believe is what a lot of people are doing that are watching our show right now.
Well, I mean, I have a portfolio of individual stocks also. Yeah. But I am sometimes short the index as a hedge, So that's really what I'm doing right now. And it's usually the S&P. I don't really bother with the NASDAQ. The NASDAQ trades like crack cocaine. It's like impossible to trade. And like the S&P at this point basically is the NASDAQ. I mean, it's like 45% tech.
Yeah, I've heard that a lot lately.
So really, like I look at the S&P as kind of like the NASDAQ 20 years ago. And, that's generally what I use, Well, I was actually up until yesterday, I was short the Nikkei. And I lost a little money on that because when JGB yields got over 3%, I thought they might have some kind of crisis, some kind of funding crisis. And I was, and by the way, Japan, a lot of people don't realize this, but Japan has had this enormous bull market going back to 2012. It's been a huge bull market, and Japanese retail is massively bullish on stocks. So I've been trying to think of ways to get short Japan over the last couple months. And I don't know. It's like, I don't think it's such a terrible idea.
So let me ask you, just based on your experience, when I trade Japan, I exclusively trade the Japanese yen future. That's just how I do it. Been in this, for about 32 years now, and I've never really researched a way to short Japan in any of the equity markets, the ETFs. When you want to be short Japan or long Japan, what vehicle do you use?
So I've traded yen a bunch of times. I've also traded Nikkei. There really isn't anything else that's liquid that you can trade.
Can I interject something here real quick, Bobby?
Yeah.
Because the CME offers two different types of Nikkei contracts, one that's denominated in yen and one that's denominated in dollars. And actually the one that's denominated in yen trades more volume. Now, what's interesting about it is because really for us domestically here in the US, making a trade in that is making a trade in two separate things. It's speculating on the Nikkei itself and speculating on the underlying currency. It's a very, very interesting trade if you're a geek and want to dive into it. I did not mean to interrupt, but I wanted to plug that real quick.
Yeah. No, I'm just not aware of a clean ETF to trade that handles
ETFs.
Yeah.
You basically have two choices. You have EWJ, which is denominated in yen, and you have DXJ, which is currency hedge, so it's denominated in dollars, right? So DXJ back in 2013 was named the best new ETF of the year. So it's run by Wisdom Tree, and the geniuses at Wisdom Tree said, look, like Japan, Abe just got elected. Japan is going to reflate. They're going to trash the currency. The BOJ bought Japanese ETFs, if you remember. Ew. The bull market started. But if you owned EWJ, you were basically unched because the yen went down so much. But if you owned DXJ, you captured all those returns. So
that's interesting to me. Can we flip back to AI for a second here? Because I have this thesis I want to run by you. And again, I think we are underselling the dramatic effect that AI is going to have, which is strange as that sounds. And here's my thesis: is that all over individuals who are working. Companies are obviously replacing their HR departments with AI. That's one thing. But I think lawyers, accountants, writers, comedians, songwriters are using AI way more than they let on. Now, I'm not suggesting that the professional writer puts out a piece that's mostly written by AI, because the AI writing is like the smartest seventh grader you'll meet. I think it's shit. But I do think it's acting as a huge editor for everybody. And I can turn around pieces much more quickly with AI. And I know that that's happening in legal work. Goldman Sachs.
You should get AI to proofread your tweets.
That's just cold. It is so cold. Yes, actually that's a great idea. And can I set that up that I do every tweet, and then like Perplexity will say, "Yeah, you didn't do that right. I can't understand it." But seriously, some of my tweets, because I write them so fast, I miss up words, and sometimes you can't read them, right? Okay. Anyway, what do you think of my thesis that nobody's talking about it, that it's more entrenched than people are even aware of at this point?
I mean, it's funny because I got an email on this earlier today. Gosh, I can't remember what it was. I mean, the crux of it was AI. Oh, it was about India, right? Because India is basically a services-based economy. And the thesis was, because I'm long India, I have the INDA ETF, and it's a big position for me, and I've had it for a while. But somebody emailed me today and said, look, like, India is a country that could be very disrupted by AI, as a whole, because it's services based. I thought that was interesting.
Oh, that is really interesting. Yeah. Bobby?
Wow. How do you play that? I mean, I guess you go to some sort of double short, triple long US versus India. There's got to be like an index pairs trade with that particular one. A friend of mine reached out to me recently and said that one of his largest clients, who's extremely anti-Trump, left the US in terms of investment, guy's worth hundreds of millions of dollars, and said he's not coming back to the US no matter what, because we elected this guy. I laughed, because I told him, look, that may stick for a year or two or three, but as he invests in, I don't know, the Swiss economy, the Japanese economy, the German economy, whatever it is, I think the real Tina is there is no alternative to the US. How far off am I on that? If you take that over a broad term, a long term.
So I don't have any problems with Trump, but like your friend, I am like 85% international at this point.
Mm-hmm.
I only have a couple of US stocks. I have ETFs in Colombia, Brazil, Chile. I have big positions in Latin America. I have big positions in Europe. I have big positions in emerging markets. Like, the US has outperformed the rest of the world, which everybody knows, for the last 15 years. And my bet is that you're going to start to have some mean reversion, and that's already happened this year. Like, Europe has outperformed the US this year. A lot of people don't realize that, but I think that's going to continue. I am not interested in US assets at all, outside of a couple of individual names. So,
and it's not to just, I don't want to put words in your mouth, but it's not because necessarily the story's changing. It's just because the positions have been built up so enormously over the last 15 years, where everyone thought that America was the only place to be, correct?
Yep, exactly.
Okay, good. So I'm looking at that INDA ETF right now. I genuinely love that chart. That is, again, my style chart. I don't know, Bobby, if you have it up too. I like that up to 50, to at least 57 in the short term, and perhaps challenging those highs of 60. By the way, not a trade recommendation, just a chart read. If we're in the AI space, is there anything that you have, and Bobby, I'm going to ask you this question too, that you think is interesting and under the radar in the AI space, or if you have no exposure in that right now, Jared?
No, I don't.
So Bobby, what do you got in that space?
I've got a long-term hold on C3 AI. I like the company. You're going to laugh at this one. I like that their symbol is AI. And the strange thing about that is I have an actual thesis, is that as people get further and further down the rabbit hole trying to find stocks, there's going to be a small group of people, maybe larger than I think. They're just going to go, well, this one is called AI, so I'm buying it.
By the way, that historically, that's not crazy.
Right.
Shit like that happens all the time based on the name.
Symbol. But that is a long-term position. I don't even look at it on a weekly basis. I don't have that much. I do actually, and this isn't a necessarily an AI stock, but I really like Legend Biotech.
What do they do?
The symbol is LEGN, Legend Biotech Corporation.
Yeah.
They essentially, this is not me looking at something where, I have a medical background where I could figure out what they're good at and what they're bad at, but they're working on multiple myeloma, which is something that kind of hits near and dear with me. And the price action is starting to go my way. I'm actually long at about $37. And I rode the move down that happened in mid-March all the way to the lows because it's lower price stock. So I'm able to have a stop, in the low teens and be able to deal with it. It doesn't bother me at all. But I like that stock and I like the recent price action. If that bursts above the 200-day moving average, I'm going to like it. I've been trying to get that in our newsletter, and Mike Arnold's just not having it.
Okay.
He's just not having it.
He has right of refusal on technical analysis.
He does.
Jared, Bobby and I have been accused of being gold bugs for 3 years. We've been beating the drum of platinum, silver, copper, me more on those other ones, but Bobby and I both on gold, which has been an absolutely great trade. You said you thought just today's price action, the metals market looked a little stretched. Do you think the fundamental thesis still exists for owning metals in US dollars?
Oh yeah, for sure. Especially gold. So here's the difference between a gold bug and a non-gold bug. The gold bug will never sell. Ever. That's a gold bug. The non-gold bug, there's a price at which I will sell. I'm not a gold bug. Like, I don't know what that level is. I don't know if it's 5,000, 10,000, something beyond that. But there is going to come a time, I have a lot of gold, I am going to sell it for sure, right? So there's nothing in the chart, there's nothing in the price action, there's nothing in the fundamentals that suggests that we are anywhere close to that time anytime soon,
Bobby, he mentioned gold bugs. Like if we were truly gold bugs, and we both have physical, but if you were truly a gold bug, you'd just amass a big physical position and perhaps constantly be selling GLD calls against it, maybe even GLD paper gold against it, right? Because if the shit really hits the fan, you're going to want to have it in your hand. Yes? Yeah,
I bought my first gold coin when I was 20 years old, 39 years ago. And I just liked it. Honestly, and that's what it was for gold for me. But I have sold plenty of times. There's been times where I'm like, crap, I need money. The bank's closed. I forgot my ATM card. I need more money than I can pull out of my ATM. Until there was a period of time, I don't know if you guys remember it, where the ATMs just didn't let you take out enough money. Especially if you
don't let you take out enough.
Yeah. Those of your traders, like we're douchebags about that. We want to have $1,000, $2,000, $3,000 in our pockets. All in hundreds, of course, which you can't break at 7-Eleven when I go to get my gum. But, I've actually said, I'm going to take this gold coin to a local dealer and get cash for it. And they give you cash.
Above spot now. Yeah.
What's that?
They pay you above spot in case
they pay you above spot and they hang on, you put the money in your pocket and you leave and you're fine. This is why I thought it was funny. And Jared, I want your comment on this, if you don't mind, that Florida is now, they passed legislation that made gold and silver legal tender in Florida. And I haven't done it yet because I think gold's got a little bit more to run before it pauses and sort of corrects lower. I'm going to bring a coin in and buy like a steak with a gold coin and bring it to the local Publix and be like, it's tender here. You have to
it would be awesome to take a tube of 10 Eagles, which are now worth about $33,000, and go buy a car. Just go buy a car.
That's another thing I've thought about. We've got a lot of gold Eagles here, and you guys don't know my address, but if you do, it's just a bad idea. I'm telling you, we are armed to the teeth. But I'm just saying, you're like, take gold. I'm dying to take a gold eagle, a 1 ounce gold eagle, and go to Publix and pick up like a prime steak. Hell, I'll even buy like a Japanese A5 Wagyu at a grocery store that sells them and go, you have to take this. We're in Florida.
By the way, it's an asinine law, isn't it?
Yeah. I'll take my $3,200 in change, please. I need it now. I want to buy this. I've got legal tender here. I remember I said to somebody, to me, it's like stamping, somebody who's 7 foot, stamping them with a thing that says tall on their forehead. I mean, it's gold. We all know we're not going to be able to go in the grocery store and pay for something. But Jared, I think that card thing, I think that's a thing. And actually, for guys like us, you might be able to get a $40,000, $50,000, $60,000 car And then on Monday, it won't be worth as much as the gold you gave. And the gold may drop, $500, and you just bought a $40,000 car for 35,000.
Hopefully they know how to hedge the risk. By the way, business opportunity. If places really start taking gold, they need people to hedge their risk if they're holding gold.
We're going to call this the Daily Dirt Edge company. That's going to hedge
the Daily Dirt Edge. We're idea people. Feed the mayonnaise to the tuna. Okay, so anyway, Jared. By the way, Jared, do you know that reference or no?
It sounds familiar. I can't remember.
It was a Michael Keaton movie. I can't even remember what it was called, from back in like the late 70s, but he was funny as hell in it. My question to you is this: you saw there was a bond auction today. I know you watch the bond market relatively closely. There was not a ton being auctioned. It was 39 billion. That's been the lower end of the range, but there was pretty decent demand. Is it surprising you that with all the spending and all the additional spending that's coming through, that there is pretty good demand for our bonds still globally?
It doesn't surprise me at all. I think the 30-year auction is actually tomorrow. Am I correct?
I believe you are correct.
30 years tomorrow, yes.
22 billion. First of all, that's a pretty small auction. Second of all, bonds are at 5%. Where else are you going to get 5% anywhere in the world? And also, if you're freaked out about the deficits and the debt and stuff like that, this is kind of a slow detonating bomb. I mean, it's not like you're going to hold a 30-year bond for 30 years. The auction's going to be fine, right? Yeah. I am not concerned about that at all. And today we had CPI, and CPI came in at 0.1, so it was a little softer, so that so the bond market ripped, and everybody gobbled it up at the auction. So.
Right. So, Bobby, this is a question that people should ask me, because I should know this, but I'm going to ask you. These guys, all the people who are submitting their bids, they have to submit them by noon, right? Not by noon, by like 11 or something. So they see the CPI, and that could have changed their bid to be more aggressive, obviously, right?
Theoretically, sure. But from my understanding, Jared, you can comment on this as well. From what I understood talking to people that I used to know at the Fed, is that these companies have their stuff set out really early, and for them to adjust would be difficult, because a lot of them have boards, and the pension funds have boards and all that. So they've kind of got set out what they need to do and where their sort of range is where they're going to do that.
Got it. We
so I think maybe
time out for a public service announcement.
Yeah, just real quick. I want to point something out before you do that. I know you have to do this, but the Scott Bessent, by the way, I don't care what happens with the economy. He's the best Treasury Secretary in history, because I watched a lot of the testimony today before those complete knuckleheads in Congress.
They're idiots.
And he was great, man. He's not a great speaker, but at one point he said, I'm not going to be lectured to by the people who created this deficit in the first place. He said that. I was like, what that? I love him. I mean, again, if I wasn't married already and I were inclined to swing that way, Mike over
married though, with 2 kids, right?
Take him from his husband. That was so great. Yeah. So great. Go ahead,
by the way, just before I do the public service announcement too, I like nothing more than the fact that Scott Bessent's openly gay with 2 kids, wonderfully nice family, and the left, who likes to paint Donald Trump and anyone on the right as hating gays and hating everybody, and they all just keep quiet about it. But anyway, that's just my personal opinion. That Luis, can you run the banner? So we do several things for Tradier. We love Tradier. You guys can do us a favor. We love the support you've given us for this show. Please try Tradier Pro for 3 months, absolutely free with no strings attached. We've talked to options traders who are experts, medium, and beginners. All of them share one thing in common, and that's they say that Tradier Pro is the cream of the crop for options trading systems. Please just scan the code, give it a try. You can cancel it if you don't like it, but trust me, you will like it. Thank you very much, Bobby.
Yeah. So again, going back to Bessent today, I didn't hear, there was one congressperson who basically said, we haven't seen the details of this, and Congress was not consulted on what the parameters of a China trade deal should be. It said, are you committed to giving us the details of this deal before it's signed so we can approve it? And Bessent went back and said, first of all, I flew here at 4 a.m. to talk to you guys. I landed at 4 a.m. So I don't have the details in front of me. But of course, Congress will see it after we sign it. I'm not aware of any responsibility for the administration. Am I wrong in saying this, Jared? I think the executive branch has full reign over what to do with trade.
For
As
the
long
time,
as
for the time being, for the time
Yeah.
being.
So you
Yeah.
think Congress will actually work against that going forward?
Well, I mean, ultimately, that's going to end up in the Supreme Court, right?
Okay.
That's going to be challenged in the Supreme Court, whether the executive branch has full authority over trade. But yeah, for the time being, they do, and Besson doesn't have to give them shit. So
That was
I love
awesome.
that. Can we go back to bonds real quick too? Because I have this thesis also that if bond prices start to drop more, that I think the Fed, and they already did kind of slow their quantitative tightening just a hair a couple months ago when things weren't exactly going their way from a demand perspective. So I believe that the downside risk is in some ways a little bit limited. So it makes me more want to take on, a 10-year, 30-year. I don't trade 30-year that much. It's so untethered from the rest of the curve that, it's basically somewhat confounding to me. Do you believe in that thesis? And do you own any bonds as trades and not investments?
oh yeah, I'm long 30s on a trade.
Okay.
Yeah,
Yeah.
at the moment.
Yeah. Long prices. So yeah. So,
Yeah.
you think yields go lower.
Yeah.
Got it. Bobby, you.
All right. So I want to shift gears a little bit here and go
Sure.
toward the coming economic news, sort of an amalgamation of the old economic news. Jared, do you think that what we've seen so far is a legitimate softening in the economy? And where do you come out on recession, stagflation, or any of the sort of dire predictions we're seeing out of some of the big shops?
I think that people like to make extreme predictions. We're going to have hyperinflation. We're going to have stagflation. We're going to have a depression. We're going to have a severe recession. In between all of this is kind of an economy that just kind of muddles along, right? And that's kind of where we are right now. We're not looking at explosive growth. We're not looking at negative growth. We're looking at 2% growth. The economy is a little bit soft. And look, like I'm wrong. Like if you asked me 2 or 3 months ago if I thought we were going to have a recession, I said yes. I was going around saying that.
I remember
And
that.
it doesn't seem to be happening. It seems like we're just getting this kind of low growth, kind of semi crappy economy.
Bobby, you saw Mike Singleton's note this morning, right? He seemed unusually somewhat down on the U.S. economy, and he cited several things. Are you a recessionista now or no?
No, he pointed to layoffs, which, I actually said that in one of my CME commentaries today that layoffs, jobless claims are going in the wrong direction. So we've had layoffs before throughout this entire cycle that we're in right now. And jobless claims have remained stagnant. And my theory was that the tech layoffs, A, they get severance packages. B, they made a lot of money and they're not running down to the unemployment office to file for claims. I still have this image that you have to go down to this like DMV like office.
You don't though, do you? It's got to be automated,
I
right?
think it's automated, but I think it screws up all the time.
Yeah.
Friend of mine was on it for a while and he was like, yeah, they don't send the right amount and they never do it on time and all this shit. Anyway, just what you would expect. But I do see jobless claims going in the wrong direction. Having said that, Jared, we talked about this, Jim and I, a couple times before. I think the administration went way too hard on tariffs without getting tax cuts and deregulation first. And I think that's where this volatility came from. Besson said this morning that the CBO has 1.6% growth figured in for the next 10 years on average. He said, we took a couple of year baseline of 2.6%. We were actually 200 million short of a surplus in the budget. Do you think deregulation and tax cuts has any opportunity to spark? And it's not really a tax cut, right?
I mean, I looked at the big, beautiful bill a couple days ago, and I picked apart all the tax provisions in it.
Mhm.
We're making the 2017 tax cuts permanent. We're increasing the child tax credit, but that's only until 2028, and then it phases out. We're increasing the SALT deduction to 40,000, but that phases out at higher levels of income. There's really, like, when people talk about how this bill expands the deficit by 3 trillion, like really what they're talking about is by making these tax cuts permanent. That really accounts for the expansion of the deficit. We have to make the tax cuts permanent. If you look at the brackets pre-2017 when Obama was president, it's a horror show. Like the 39.6% rate kicks in at like 600 grand, you
That's
know?
ridiculous.
So like we needed to do these tax cuts. And now, like you said, we have to focus on deregulation and we have to focus on supply side stuff to grow the economy. And like you said, also, we've been focused on tariffs and that hasn't been happening. I think we did it in the wrong order, you know.
What is wrong with them? Both sides agree. I like starting out like that. Both sides have agreed publicly that cutting the capital gains tax from its punitive level, which is 23.8 at the high end, would result in more receipts from that tax, which is an indication that it would spur economic growth and lessen the need to avoid that tax. But they never talk about it. Neither of you guys have heard them talk about reducing capital gains tax, right?
No.
I think there must not be proper ventilation in that White House because they're all losing their minds. It should definitely be the case. The BOE, by the way, when they talk about their static estimates of deficits and debt, like deregulation and tax cuts are not going to spur any economic growth at all. That is like economic dereliction. It's the most dumb thing I've ever seen. But anyway, that's more of a rant than a question. But Jared, you got the floor.
Well, one of the things I'm concerned about is, back like 2 months ago, Lutnick said that the goal was to eliminate income taxes for people making less than $150,000 a year.
Heard it.
I remember that.
$150,000 a year is 93% of the population. So what he's essentially saying is that 7% of the population is going to be responsible for the entire tax burden of the country. I think that is the worst idea in the history of bad ideas. Like, to the extent that we live in a democracy, we should all have a financial stake in it. If you live in some hollow in West Virginia and you're living on food stamps, I don't care if you write $100 check and mail it into the government. We all need to have skin in the game. To eliminate taxes for 93% of people is insanity. So
I want to go to a comment from Widge if Louis saw me asking him to put that up. The U.S. is in that 16 to 18% tax receipts to GDP sweet spot. They're not going to get any more tax revenue by reverting to 2017 tax lows, but they will lose growth. I assume, Widge, that you mean if they don't pass this, because this is just making those 2017 tax cuts permanent.
Hold on, can I? Because we're talking about raising taxes or keeping them at the same. I hate when they let them expire. It's such a bullshit thing. So Widge is saying if we raise taxes like the Democrats want to do, we will not gain revenue and we will lose growth. I agree with that 100. This is not going to surprise Widge.
It's not just the Democrats. 100%. It's Josh Hawley. It's Steve Bannon. It's a lot of Republicans. I mean, Trump himself even said, yes, I would want to see a higher tax rate on rich people, but we're not going to do it because that's how George Bush the first lost the election, right?
Yeah, rightly so. Yeah.
These are not supply siders, right? Like this, I got to tell you, like I don't, first of all, I don't vote. I never vote. Okay. Mm-hmm. But had I voted, I would have voted for Trump and I would be having major buyer's remorse, right? Because this is not pro-growth supply side stuff that you saw in the 1980s and 1990s. Like this is populism. Like this is rank populism. And it's not good for growth. It's not good for anybody.
Yeah, and I certainly did vote for Trump. And if the election were tomorrow, I would again. But I have some similar complaints as you do as well. Josh Hawley yesterday talked about raising the federal minimum wage to 15. Imagine like you're working at some sort of podunk place in the middle of Nebraska. Those people got to pay you $15 an hour. They're going to fire you. It is a destructive policy. And where is the supply side? Did you see him write that?
Yeah, and Josh Hawley also wants to cap credit card interest rates. That
is asinine.
Yeah,
that's not how you teach people to not use debt. You teach people that. I mean, I granted the stick hasn't worked really well. People still take out debt at 25.28% APR. You see it all the time. But this is the thing that bothers me when anyone says this kind of thing, and it's a big Bernie Sanders thing. There was a period of time where I was leaning toward becoming a Bernie fan. But he uses that living wage thing. And to your point, podunk, West Virginia, Jimmy, if you're at a restaurant in, I think you said Nebraska, living wage is contingent upon where you live and what your family structure is like. I hate when they say living wage. In New York City, two people can be making $250,000, and one of them is a single guy out of, Cornell, and the other one is a single mom who happens to have a nursing degree with 3 kids, and their wage is not the same. They make the same amount of money, what a lot of people would consider to be a living wage. But in Manhattan specifically, that single mom's going to be struggling. She's going to be going check to check at that level. So that's what drives me crazy. And it drives me crazy when somebody like Josh Hawley comes out and says, we need to raise the minimum wage. It shouldn't be federal. It should never be federal. Never. It's the dumbest thing I've ever seen. There shouldn't be a minimum wage.
Yep. So I'll add one thing to that real quick too, because I talked to someone who's actually friendly with Josh Hawley and has a ton of respect for him. Josh Hawley, when he clarified it, he said because it would not affect Missourians at all, where he's from, because it's already $15 minimum wage there. So in the back of my head, I'm thinking he's trying to say we have this stupid law. I don't want you guys to beat us, so you guys have to have a stupid law too. And I think that is absurd, but I do want to switch because I do have a question here. Because again, my thesis at the beginning of the year was 2025 was going to be a transition. It was going to be rocky. We saw that in spades in April. I do think 2026 is going to be a beneficiary of some calmness. I'm hoping deregulation, tax things settled. I think we could be on to a decent sized domestic bull market. Do you look that far out, Jared, or is that too far for you?
That's too far for me. Yeah.
Bobby, you?
Yeah, it's too far for me.
Okay, you guys are no fun. Come on. Okay.
I'll tell you this. I wouldn't call it buyer's remorse. This is the first time I voted for Trump. In the first election, I voted for the Libertarian. I don't remember his name, the guy who didn't know what Aleppo was. Gary Johnson. That's it. And then in the election,
I donated to Gary Johnson, actually.
There you go. Yeah. Same page. And then the next election, I voted again, and I don't even think I remember. I don't even think I know what the candidate's name was. The next time when Trump lost to Biden, I voted Libertarian.
Joe Jorgensen.
Oh, right. Yeah. I do that for a specific reason, Jared. Just, this is my own thing. I've gotten into arguments with family members and friends on the other side that say, what do you care? You don't even vote. And they do that whole thing about like, you're not allowed to have an opinion because you don't vote. Bullshit. You can have whatever opinion you want.
Who says that? Yeah, I
do that just to cut that off.
Yeah.
Right. And this particular election, I did vote for Trump because I thought that Kamala Harris was so inept. And I would not say that I have buyer's remorse at this point. I would say that this is my take on it. And I want you to tell me I'm stupid. I think that Trump learned in 2017 that he's not the dictator or the emperor that the left is accusing him of being right now. And he's giving in places where I wish he wouldn't. And I also think he's very aware of 2026. And I think he wants to keep the House and the Senate. And I suspect if he does, he'd be the most active lame duck president we've ever seen. What do you guys think of that, both of you?
I actually think he has a decent shot of keeping the House and the Senate. Mm-hmm. The conventional wisdom is that the sitting president always loses the midterms.
Right.
I don't think that's the case this time. The Democrats are such a disaster.
Yeah, complete disarray.
I think the Republicans actually have a decent shot at retaining Congress.
I like that opinion too, and I actually like. What is it the Democrats? What are they going for now? I really have such a little idea, and they're polling at such horrible numbers. And then you see what's happening in LA, and I think they genuinely believe that what's happening in LA is going to be like, see, when Trump's in office, there's chaos. I don't think anybody's viewing it that way except brain dead people. Do you agree, Jared?
Yeah, 100%. When people look at a guy like Gavin Newsom, who's basically saying, sure, burn down the city. Like, that's what we want. Like, nobody wants that. Like, people, like, it's insanity.
It's total insanity. Bobby, back to market stuff real quick. We talked, let's put 2026 out of it because it's way too far. If you had to pick one thing for the second half of this year, just one thing, what do you think it would be to invest in?
If I had to pick one sector, one stock.
Yeah, sure. Because it can be anything. It can be a sector.
All right, I'll tell you what. I'll do this. It's gold.
It is.
That's an easy one for me because I've said that for the last 3 years.
And been right the whole time.
Yeah, it's actually, we talked to Ali Canal yesterday from Yahoo on our other show. And it was actually on Yahoo where I was doing for the last 2 out of the last 3 years, I did a pick your best asset for the following year. I didn't do it last year, but I did it in 2022 and 2023. And I picked gold both times because my focus on that, when somebody is giving me that much rope to hang myself with, is risk adjusted. I always lead with risk adjusted. And I still think, because of the chaos of Trump, because of the 2026 midterms, because we don't know yet, I don't think there's going to be inflation from these tariffs. And I'm not looking at this morning's number as evidence of that. I think they've been all over the place and they haven't been entrenched yet. But I think it, on a risk adjusted basis, gold is the safest thing that somebody who doesn't look at things as closely as we do can possibly buy.
I like that answer a lot. Do you have an answer to that, Jared? And by the way, does Bitcoin in your thesis ever anywhere? Or do you think it's nonsense?
I don't think it's nonsense, but I don't like trading 80 vol assets.
you,
know what I mean?
you and me
So,
both, brother.
Like I just don't. No, I think if you ask me, the number one thing to hold for the next 6 months would actually be the dollar. And I'm a sentiment guy. I'm very much a sentiment trader. And sentiment is so unbelievably negative. Go look at some charts. People are limit short, max short the dollar. We're going to get a squeeze in the dollar. I think it's going to happen soon, like in the next couple of weeks. I think the dollar is going to have a big counter trend rally towards the end of the year. So
that's interesting, because I have 3 of the charts I have up of my 6 charts are the Aussie, the Canada, and the Euro. And I'm looking for them to all kind of agree when it's time to short them all. And I plan on doing that as well, too, because I think that is a trade that's overdone. Bob, you want to put up the comment?
Yeah, Witch threw a comment up there, and I think I understand what he's saying. His comment is the way to get everyone to have skin in the game is to codify tariffs as a pay for. I'm not going to lie and say that I understand that comment. I'm not quite sure what he means by that.
Here's what I
do you guys
think.
understand it?
I think no, see, because I was going to say, as the tariffs as a pay for, and if they're codified, like we went from having 2.5% average tariffs, now we have 10% average tariffs. We kept them there. There is an argument to be made that if it is not too economically disruptive to trade, that it will be a nice bring in money to the government thing, because foreign countries do pay some of that tax, and we already are seeing money coming in, and the consumer has not been the recipient of huge tax hikes. But I don't see how that puts everyone's skin in the game, which I have to say I don't understand it either. Jared, do you have anything?
I'm sure he'll clarify.
He'll clarify. He's smart that way. Yeah.
So going back to what you said about, like, for 2026, that I think is going to be the year where Trump, and this is, I think, why he's so, obviously he likes lower rates. I mean, it's a no-brainer. He's a real estate guy, right? He's always been like that. But I think that's why he's on Powell so hard to cut rates, is because he knows he needs to show economic growth. Inflation be damned at this point. I really think it's all focused on 2026.
Did you see the comments out of Paul Tudor Jones today?
I did.
How he said that Trump is going to nominate an Uber dove to be Fed chairman.
Yeah. When is Powell done, or is that the prediction that he's going to?
I think he's done early 2026.
Oh, I thought it was a little later than that. But the talk now is that Trump is going to name his guy soon, in hopes of, like, putting pressure on Powell, having, like, the world think there's a shadow Fed or something going on. So I think it's very, very interesting. And I hate when Trump delves into that stuff. And I would love to hear Jay Powell. And again, by the way, I think Jay Powell's legacy is going to be as an incompetent direct Fed chairman. I think that he made an enormous mistake in the summer and fall of 2021. He seems like a hell of a likable guy. I have no problem with him personally. He just took a job that a lot weighs on you, and he messed it up. But that being said, I'd love to see him just not even know what Trump says about rates, and just every time they ask him, say, I really was not aware of that. I wasn't paying attention at all. I literally have a job to do. I'm kind of busy. That would be nice, wouldn't it?
So it's funny you say that, because I was actually going to say when you were done that I think Jay Powell has a little bit of Jim Iuorio in him, and then you went on a rant about how he's going to be known as a terrible Fed chair, and he's probably a nice guy, but he's incompetent. That's not what I meant.
Yeah.
What I meant is that I think I know somebody that knows him as well.
He would do the opposite of what he's pressured. I know what you're
well, exactly. That's exactly where I was going with this. I know somebody that knows Powell, and this particular person said to me that guy is about as, like, angry and confrontational as somebody can get, and still get to where he got today. He said that he will not leave a day sooner than he has to because he knows he's driving Trump crazy. And he said he imagines Jay Powell having a cup of coffee and just chuckling to himself about how Trump's going crazy that he hasn't cut rates yet. So for what that's worth.
Yeah. Yeah. Hold, you ask the next question. I'm trying to get my new shelter dog up here to see if she'll say hi to you guys.
All right, real quick. Well, we've got a question from Dylan. Powell does not seem to be a streak guy, so that is concerning.
A steak guy or a streak?
Oh, steak. I thought I read streak. And I'm like, hey, he doesn't like going on streaks. He doesn't seem to be a steak guy. That is concerning to me. So that's not a question. It's actually a comment. That is concerning to me. So where I'd like to go next, if you don't mind, is ask you about the bill again, because you said you looked at it. I glanced at it too. Today, Besson told Congress that in the bill is returning the maximum bracket to 39%. Honestly, I don't know where that's going. I think it's 30%, 36% now. So 37. Going to 37. So going to 39%. Jared knows because he's in it. I'm not. So the second thing he said is the big beautiful bill has no tax on tips, no tax on overtime. He said you're going to be able to deduct the interest on an American-made car. This is one of those things that bugs me. Like either you could deduct it or you can't. And this is why I just scream from the rooftops about just a flat tax and leave it at that. First of all, Jared, do you remember seeing that stuff in the big beautiful bill when you looked at it?
Yeah, of course. Yeah.
What are your thoughts on those things?
So the funny thing about the no tax on tips, I actually looked this up. How much do you think the government collects in revenue off of taxes on tips? Take a guess.
I bet it's $100 million. I bet it's nothing.
It's $4 billion.
$4 billion.
What?
Okay.
$4 billion. Yeah. They $4 billion in revenue.
That's shocking to me.
That's $30 billion in tip income that is declared, and there's $4 billion in taxes on that.
So how much do you think is undeclared, Mr. Restaurant owner?
I can tell you that I own a restaurant.
So if you think about this from a political perspective, this is the only thing that has bipartisan support. It's like politically, it's the easiest thing to do because it costs nothing. Costs the government $4 billion. Who cares?
Yeah,
it's gonna buy a bunch of votes, right?
Yeah,
it's like the best
10
thing
minutes
in the
of
world.
expenses. Yeah.
One of the things that concerns me about the tax code in general, you know, I mentioned before about how the SALT deduction is going to 40,000, but then it phases out. Everything phases out at higher levels of income, right? No matter what it is, even the child tax credit phases out at higher levels of income. And it just makes the tax code more and more progressive. I mean, you've heard all these statistics about how the top 1% pay X percent of the taxes. One of the reasons that number keeps getting bigger and bigger is because they keep building this progressivity into the tax code. And it sucks.
Oh, it completely sucks. And by the way, taking money away from Bill Gates is what all these people who are voting this way think it is. And that's not at all. The people who are making $1 million a year are literally the movers and the shakers. Those are the people who I want creating businesses and creating jobs. What do the people think they do with their extra money? What do the people, more importantly, what do they think the government's going to do that's better for society by taking away the guy who's making $1 million a year's money? It is absolutely asinine. It makes no sense. And when Warren Buffett, I pay only 17% in taxes. First of all, you can pay as many as you want. Just there's a line there that says donation. 2, I want Warren Buffett to have as much money as he can. What does he do with it? He lends it to companies. He buys companies. He gets on boards and redoes companies that he thinks are bad. The whole thing is asinine. Bobby, do you want rich people to be richer or what?
I do. And I want people who are middle class to become rich. And I want people who are poor to become middle class. You can't just knock these people down and think it's going to have no effect on lower income. I have a friend who actually, this was a really smart thing when you talk about the rich people not paying taxes anyway, right? No matter what you do to the tax rates. I had a friend who is a gold bug and has millions in actual physical gold in vaults. And he bought his last car against his gold holdings. So he borrowed against his gold holdings, used physical gold as collateral. Now he had to put a lot of physical gold up, a lot more than the car cost, but he found a bank that would accept it as collateral. So he paid interest on a really high-end car, a depreciating asset, while his gold was continuing to appreciate. He had the money to make the payment. It's not a big deal. He could have paid cash for it. I said, why don't you just pay cash for it? He goes, why am I going to pay cash for a depreciating asset? That's his logic. And I actually, Jared, I wanted to bring this up to you personally, but now that we got you on the show, is that crazy logic? I mean, he said, I'm paying cash for a depreciating asset, and I'm losing the growth that cash could generate for me. Is that nuts?
No, I mean, dude, people do that all the time. I mean, not necessarily with gold, but with their own stock, with the stock in their own company. They collar it or they borrow against it or whatever. But yeah, I mean, if the stock or the gold is appreciating faster than inflation, then it makes sense.
Yeah. My wife, I went to buy her a car after her car got squashed last summer, and they were given 3% financing. So I took as much as they would give me. My wife was like, "What's crazy? I gave you the checkbook. Why didn't you just buy the car?" I was like, that's not how this works. You know what I mean? The $50,000 for the car, right off the bat, I could make 4.5 on, 2-year bills. And I'm only paying 3% on the car. It's a math equation. But anyway, she hates debt, and I respect that a ton. I just don't agree with it. Let's close it up. Anyone else, any closing words, or can I play us out?
Jared, talk about your book again, and actually put it physically in front of your face so everybody could see it, because the camera's
not
really
your
focused
face.
on
Yeah,
your
now
face.
we're even. Okay, good.
So I'm
There
gonna send you guys a copy of this.
Please
I'd
do.
love that.
And you guys can read it and we can talk about it. Rule 62: Meditations on Success and Spirituality.
That's
Love
perfect. I need a new book. I'm halfway through the book of another guest that we're going to have. I'm not going to mention the book on here until I'm done with it and decide if I like it or not. And I need a new book after that. I read Alexei Navalny's autobiography, really.
Was it good?
It was fantastic, man, but it's like 487 pages, and that's just a struggle for me. And once it gets to be about 350 plus, it's a struggle for me because I read in spurts.
Yeah.
I'll read 25, 30, 45 pages, and then I don't read for 2 days.
Yeah.
So it's tough when a book is that long because it just takes me a long time to finish. The book is fantastic. There's a lot in Alexei Navalny's biography that will remind you of what was happening to Trump before this particular term. A lot. It's very strange, man. It's a very strange thing to read.
Pick it up. Okay, he is Jared Dillian, who is a friend of ours and the author of several books that we like. One of the ones I've liked over the last few years has been Money, No Worries, and also the one he mentioned, and also what the hell?
Night Moves.
Your copy of Night Moves. I just had it in my hand, and now it's gone.
Here we go.
Oh, Night Moves. There it is.
Stories.
Okay. We
And
are
the new book,
Iuorio
Rule
and Bob
62 is
Iaccino.
the new book.
What's that?
62? Rule 62 is the new book.
Yeah. This is Trader's Edge. Before we go, I do want to thank you guys so much for all the success, all the support you've given us to make these 2 projects of ours a success. If you want to see these topics in greater detail, an actual investment trading thesis off them as well, please go to the Unfiltered Investor newsletter. Thank you guys for the support on that as well. This has been the Trader's Edge. Thank you.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.